Well, good afternoon and welcome to TFR's almost at the very end of the year. We're now in our 19th year and my goodness, what a lot's happened in 2015, hasn't it? It gives me huge pleasure to welcome to our studio Danae from the Centre for Economics and Business Research. What better person could we have here to give us a perspective on the Greek exit that managed to scrape away from falling off the edge, and we didn't quite get as hard a landing in China or from China as we thought. But those are just some of the things that shaped 2015. What do you think's been going on?
Yeah, it's certainly true that 2015 has been a bumpy road for the global economy. We've had the China fears for a hard landing and Brexit being very much a very real risk.
Yeah.
And it seems that for now these risks are off the table, but that's more of the first sight. In reality, I think the Brexit plan is off the table, but still somewhere in a Eurozone drawer hiding to re-emerge. And China, a hard landing was avoided, but debt levels are still very high, and any efforts to keep growth high through more debt risks the sustainability of growth in China in the next downturn.
But the Chinese banks have got loads of reserves, and they're the most well-stacked banks in the world.
There is still a lot of ammunition to prevent a hard landing this time around, but if you think about the next cyclical downturn, it may not be there.
Right, okay. I'm a bit worried about what lies beneath from Greece. Could you elaborate a bit on what you think might come out and bite us on the bottom in 2016?
Political uncertainty is very important because the bailout has been agreed, but it's important to pass the measures in Parliament. And every time this procedure has happened, a lot of MPs have left the government. So there is a political uncertainty element. The banking sector is still quite fragile. There's a lot of non-performing loans, and the ECB stress tests haven't been as positive as we would have hoped. So there are still some risks underlying, and there's still no debt relief. So this will need to be brought back to the table if the growth plan for Greece is to be sustainable.
As a Greek national yourself, how do you feel about the long term for Greece?
Well, the structural problems are still very important. Unemployment is very high, especially among young people, and a lot of people have emigrated from Greece to the UK or elsewhere, which means that it's really hard to be optimistic for the prospects of the country, given that there is no young people there to drive growth forward, and at the same time there's all this high debt and taxes that will need to be repaid. So the structural problems are very important.
Okay. So the message for us is to make sure we have our holidays there as much as possible.
That would be good, and the weak euro helps.
Indeed, indeed. A thought for 2016, some nice sunshine in Greece. So let's move on to another area of the economy that's been certainly at the front of quite a lot of my bankers' minds, and that's been the fall in the price of oil. We're now hovering at just above 40 a barrel. That's Brent, of course. And the Saudis won't stop pumping. A lot of the oil shale companies in the US have packed up and gone home because they can't sell their oil at the prices they thought they were going to sell it at. What's the long-term implications for all of this? And doesn't oil lubricate world trade? And I'm a bit worried.
Well, as economists, we like to think of developments in prices as a function of supply and demand.
Yes, of course, yes.
And of course, speculation sometimes also plays a role, but in
does.
Oil, not as much as in other markets.
Yeah,
so if we think of supply, you have the Saudi decision and the OPEC decision to keep production steady, which is putting downward pressure on prices on purpose, one might think.
Yes.
And also the shale market in the US, which is now starting to come off, as you said, with some producers not longer being able to cope.
No.
On the demand side, you have China, who for many years has been fueling this high oil prices through its demand for oil and other commodities to support its development and its industrialization. But this is now changing, as we just discussed. China is slowing down. And not only that, it's also transitioning away from being an economy too focused on exports and manufacturing. It's trying to develop a consumer economy, which might not need this industrialization and oil and such commodities anymore. So you have a downward pressure from demand. And then on top of that, you also have the exchange rate, because oil is priced in dollars, and the US Fed rate rise means that the dollar is getting stronger and stronger, which in turn pushes the price of oil down.
Yes.
Of course, you also have Iran coming into the global economy. A lot of people expect this will increase the supply even more and put further downward pressure on prices. But we think that it's going to take longer for Iran to come onto the global market. I was there in September. The infrastructure is not really there. It's going to take some time before Iran can really influence the global market. But it is something that we consider for the long term. Okay. So we don't think that oil prices will come back to the levels they were before the current downturn. And of course that will impact trade substantially.
Now there are some winners, aren't there, with low oil prices? The big importers of oil, the big refineries. In terms of some of the deals I've been seeing, some of the activity has been going up. So it's costing them a lot less to get the oil in the door, and all the petrochemical exporters are happy as Larry. What's your thought on that? And how will that transform some of the economies that have historically had to pay quite a lot for their oil?
Yeah, overall, lower oil prices is a good thing for the global economy. The majority of the countries in the world are net oil importers. It's good for consumers. It means you don't have to pay as much to fuel your car, and you can spend on other things. So consumer-led recoveries in much of the advanced world, like the UK or the Eurozone or the US, are going to be helped by lower oil prices.
You touched earlier on the rise in interest rates, and at the time we're recording this interview, which is the 11th of December, Ms. Yellen will be doing her stuff next week, so we don't know what it's going to be, but we do know what the overall likely impact of a Fed interest rate rise is going to have on the economy, and I wondered if you could share a bit more about your thoughts on that one in a bit more detail. That'd be great.
There's been strong signals for an interest rate rise in the US next week at the December meeting. And a lot of the effect has already been priced in. A lot of emerging market currencies, for example, have already suffered a big hit from the expectation. To an extent, maybe they've over-suffered a hit. A lot of the currencies in Southeast Asia, for example, are considered to be undervalued if you look at the economic fundamentals. So it might be a case for them appreciating again once the actual event happens, because so far we've had a lot of uncertainty. Will they raise rates? Will they not raise rates? When will it happen? So maybe once the event actually happens, the absence of this uncertainty will be good for the global economy. Overall, it's a big risk to emerging markets, though, because for the past few years since the financial crisis, when interest rates in the US have been very low, all the capital looking for returns has moved to emerging markets. And now perhaps this will start returning back to the US, and emerging markets are faced with very high levels of debt denominated in dollars, which will make it more expensive for them to repay that.
Of course.
So it is a big risk for those markets that have seen capital flowing in during the times of low interest rates.
So some of the responses to capital flight have actually hampered trade, and do you think that will encourage protectionism, or as you say, it will be more of an adjustment and everything will rebalance again?
Well, I think if you think about trade, especially in Asia, you also have all these regional agreements that are perhaps more important developments. You have the ASEAN Economic Community, and also China's One Belt, One Road project, trying to connect China with Europe and revive the old Silk Road by sea and by road. And the Asian Infrastructure Investment Bank as well, trying to create regional links there. So I think this will be very important developments, and perhaps helped by the low oil prices, because it makes the building of new infrastructure and transport cheaper.
So do you think relations between China and the US will get warmer as we go into 2016? Because there was a little controversy over the AIIB, and there's a bit of turf wars going on from where we're sitting. How will those dialogues change, do you think?
Yeah, I think that's more of a political question, but also in terms of the economics, the fact that the International Monetary Fund accepted the renminbi in its special drawing right, I think it's a sign that China wants to be more integrated into Western international institutions. So I think we have reason to be perhaps a bit more optimistic in 2016.
Well, that's a very good place to say thank you very much. Let's hang on to that word, optimistic, for 2016. I'm optimistic for 2016, and so are we all here at TFR. Thank you very much for coming in.